Spain and all right. Okay, thank you so much. As of the last time on our last class, we talked about who can remember what we talked about on our last class? I think we talked about something like a triple top. Mm, okay.
Head and
On
shoulder
our last
pattern.
class, we talked about
Head and
thank you so
shoulder
much.
threading
We talked
pattern.
about the head and shoulder. Thank you so much. We talk about the head and shoulder training pattern and the inverted head and shoulder training pattern. How about you explain that you use the head and shoulder is a what a cell pattern. Why an inverted head and shoulder, which is what we are seeing on screen now, is what a bi pattern. So after the class, session of us understood it because no one brought in a Christian where Christian was trying to attain. All right, so the next thing we have is not something tough, rather it's something familiar, which we call the pennant pattern. All right, now, so the pennant closely looks like the symmetrical triangle. As the pennant is more like a symmetrical triangle, it's hardly for you to differentiate them. Like so, triangle. The pennant closely look like a symmetrical triangle, but its characteristics are not the same. Okay, the pennant has the shape of a wedge of consolidation. It usually appears after a sudden upward or downward movement. The life of a pennant is short according to the time frame used. The pennant is a continuation pattern. The size of the axis of a pennant it depends on the movement that preceded it. The formation of the pennant can intervene a bullish or bearish trend. Most often, these breaks occur halfway the movement. All right. So the target calculation is compared to the previous trend, which calculate upward up or down, period to the formation of the pennant, and the extended and then extended that height on the last name. The actual difference between symmetrical triangle and the pennant pattern is that a pennant pattern made at a junction. For example, if you look at when it's a symmetrical triangle, it's not compulsory to meet here. You understand? But on a pennant pattern, the triangle should what meet each other. The way they face each other, you know, the support is facing upward sloping, while the resistance is facing downward sloping. So it's a kind of the structure have to what meet each other at the junction. But on a symmetrical triangle, it might not meet, but it will still be downward and upward sloping, but it might not meet. So, and again, they talk about the take profit. Like the take profit is based on the flag, the sudden movement that happened before the panel pattern. So we also what create another sudden movement. Just like let's say sudden movement from here above. So you expect this almost equal to the kind of sudden movement that happened before the panel pattern after the what breakout. Let me show you a panel pattern in real life. So most times when you see a symmetrical triangle, it can actually be a pennant pattern, but there is no difference between them. It's still what you still represent each other. When you see a bullish symmetrical triangle, it also looks like a bearish symmetrical triangle. It also looks like a like on a bearish symmetrical triangle, it's occurring in a context of what a downtrend for the pattern and what continuation. Why on a bullish symmetrical triangle, it occurs in a context of what an uptrend before a breakout and what upward movement. So they have a lot of similarities. All right. So whether for me, how I used to trade, I don't mind looking out for pennant or trying to differentiate between whichever one I saw. I just trade it. So I can call it symmetrical triangle. I can call it what pennant pattern. Because I don't have to have a specific something to differentiate them. You understand? If I it doesn't change, it doesn't change any fact. It's still what. So like I said, the take off pattern started to happen. So it's more like let's say look at this picture now. Yeah, seems to be the support. So the movement that occurs before the banner pattern starts to form is what you can use to measure your take profit. Though most times these take profits are not for 100%. You need to be a smart trader to be able to take the right set profit that can help you take the profit from the market before the market starts to price against. All right. Like normally, before we can draw our trend line, we must have what? At least two lows or two highs. Okay, there must be a piece of what? Two lows and two highs, which is what you must have before you can what? Connect your trend line. Without having at least those two lows, it can give you an invalid structure. You might be getting an invalid structure because there is no confirmation that yes, that trend line is what serving as a resistance or serving as what a support. But when there is at least two lows or two highs, for example, two lows, and you draw your trend line, it indicates that yes, actually that trend line is serving as what support. And when the market gets to that trend line, it's expected to what bounce or a breakout that shows you the continuation of what the trend. Let's try to know whether we can find example on our chart. So you see, they made it very short. They combine both the bullish and bearish because they know that there's nothing off about it. It's more like what a symmetrical triangle. All right. Like I said before, the pennant pattern can look this way: a bearish pennant pattern or a bullish pennant pattern. First, all right. This is how it used to look like. Like I said, from what I can ascertain, they actually used what mate. So, but when it comes to symmetrical triangle, it's not a must, it's what it will mate. So when you talk about a bullish one, they still the same thing like a bullish or symmetrical triangle. The structure is for occurs in the context of an uptrend from the first high, first low, second low, second high, second low, and we're expecting something like a breakout. So that will be a retest. Yeah? The retest can occur, which always come with a force. So why when you talk about a bearish one, when you talk about a bearish one, you're calling in the context of a downtrend. Create the first low, create the first high, create the second low, create the second high. You can still create the third low, or you will not even create the third low, it could just what break out. So a breakout test. So this is how a structure of a pennant pattern looks like. So most times you can find it hard to differentiate them between symmetrical triangle, or they just have a lot of similarities. But all the same, let's see if we can find a similarities on our chart, like a kind of let's say symmetrical triangle that meet each other, which we can call our pennant pattern. Let's see if we can find one. Let's see if we can find one. Remember, it's actually what a continuation pattern. So if it's in the context of a downtrend, you're expecting to see what a bearish what pennant. If you're calling it in an uptrend, you're expecting to see what a bullish what pennant. This could be this could be one. Exactly. So this is an example. You can what happened, guys? Guys, what happened?
There's no sound. There's no sound. We can't hear you.
We should be asking you what happened.
Poor network, I think.
I think it's poor network. Where did I actually where at that what at the point do you guys stop hearing me? Hmm?
Yes, pattern.
When you were searching for a real life pattern,
The
for a real life
continuation.
experience.
Trying to look at the similarities.
Okay, okay. Hold on. Let me share my screen, okay? I think it's network. I got disconnected. I don't know, network is just kind of misbehaving. All right, this was what I spotted. The one example of pennant pattern spotted on our chart. This in a chart of an oh my god, I'm sorry, OMG USDT. Now you can see this is our first low. This is our first low, our first high, our second low, our second high. A retracement, a breakout, under retest, and what movement. So another can see the identify it as the bullish symmetrical triangle, but just know it that okay, whenever they actually in the way you connect your trend line, they actually meet each other. You can call it your pennant pattern. So whether you call it your pennant pattern or you call it a symmetrical triangle, it still give you what the same signal. It still give you what the same entry points. All right. So, but when you talk about the take profit, like I said last time, if I want to measure a take profit based on a pennant pattern, I will start from here, or I will start from here. The distance between here to here. I'll measure it what from the breakout. Let me show you. The distance between here to here. I will clone it. Oh, I'll put it here. So I'll put it here. Around here, a kind of a double top form there. This is a double top. You can see that. You can see a double top here. The first touch, the second touch, which is nearly or equal. Then this is the neckline. Here is the breakout of the neckline. Here is the test. Let me show you again. Okay. Here is the neckline. Here is the breakout of the neckline. Here is the test and what a continuation moment. So this is an example of what a bullish what pennant pattern. So there's nothing kind of confusing about it. As far as you understand the symmetrical triangle, we are good to what go. Any question? Any question? Any question? Any question?
Understood.
Okay. It seems like we don't have any question. Let's see what we have next. Next thing we have next is the horizontal pattern. Okay, the channel. Sorry. Next we have next is the channel. We have the bullish channel. We have the bearish or channel. So the bullish channel, they said so the horizontal channel is a pattern that underlies an investor indecisiveness. They formed by two parallel lines that frame the upward. There must have been at least more contact points it has. More contact point it has, more the trend line is stronger, and more their breakout will give a strong sell signal. The bullish channel, one of the most used chart patterns you can find in every time frame. The bearish channel is a continual trend pattern. The bearish channel is formed by two parallel lines that frame the downward price trend. To validate a line, there must have been at least 2 points of contact with the price. The more contact points it has, the more the trend line is stronger and more the breaker will give strong buy signal. Sell signal. Okay, strong buy signal. The bearish channel, one of the most used chart pattern you can find in every time frame. The horizontal channel. The horizontal channel is a pattern that underlies an investor indecisiveness. The horizontal channel is formed by two horizontal and parallel lines that frame the evolution of price validate a line. There must have been at least 2 points of contact with the price. More contact point it will have, more this will be strong and their breaker will give an important buy and sell signal. So let's take a look at how the pattern they are talking about. Okay, so channels. Okay, when they talk about channels, we can have the horizontal channel, we can have the upward channel, the downward channel. So channel is when there is what two parallel lines. When the price is between what two parallel lines, you call it a channel. So it means, for example, it means, for example, when this is what they mean by parallel line. This is an example of parallel line, but this is a bullish one, parallel line. So they are parallel in structure. It can be horizontal, it can be upward sloping, it can be what? Downward sloping. So when the price is ranging within this kind of trend line connection, you call it what? A channel. So for example, a bull flag has a channel. A bear flag has what? A channel. Because it's range between a parallel line. For example, if it's a blue flag range within a downward sloping what channel. Why a bear flag range on an upward was sloping channel before the breakout what occur. All right. So type of channel we have the ascending channel, the descending channel, and the horizontal channel. Somehow, most times, channel can confuse you with what? Is it wage pattern or what? But all they say, this is how, this is the major trade structure of what? Channel that we have. So if you look at this ascending channel, it means when the market is what? On an uptrend. Market has been ranging on what? Uptrend, channel, uptrend, uptrend. If you get to the support, it bounce. If you get to the support, it bounce. But at the time, what? It break out. So that break out of that channel should give you what? A signal. This is what? A sell signal. So on the ascending channel, when the market has been ranging downward within a channel, up, down, but it's on the what? On the downward channel. A breakdown of the resistance was give you a buy signal. And they said the more the consolidation on this channel, the more the breakout will create what? A bigger what? Impulse move. We also have the horizontal channel, which is just what? Horizontal. This horizontal parallel lines, which is what? Giving support to the price movement, giving resistance to what? The price movement. So wherever the breakout occurred at this particular point, wherever the breakout occur is where you what? You make your what? Signal. So it can break the resistance, it can break what? The support. So if you break the support, it's a sell signal. If you break the resistance, it's a buy signal. Let's show you an example. This is an example of a real life chart. All right. Now, if you look at this ascending channel, sorry, this pattern. Somehow it looks like what? A blue flag. To tell you that a blue flag has what? An ascending what? Channel. Are you getting the point now? It means that a blue flag has what? An ascending channel. Because if you look at this now, they said once the breakout occur, it was a sell signal. And this is how what a blue flag used to look like. When there is a flag in the market, then you now start to create what? An ascending channel. Then you now wait for the breakout of the ascending channel to what? Sell your market. So the next one we have is an example of a horizontal channel. This one, example of what? Horizontal channel. So at any point, when the market is on an uptrend and this horizontal channel starts to occur, you have more confidence that the breakout should occur at the what? Resistance. But at any time it doesn't occur at the resistance and it occur at the support, then it's a sell signal for you. But normally when the structure is like this, when the market is on an uptrend, it should give you what? A continuation pattern by breaking out what? The resistance. And once this resistance is broken, it means a new support has been what? Created. So what you do is you will wait for a retest and you buy your market. The selling triangle is more like a blue flag. All right, because what? It has a structure of what? A blue flag channel. So which means a blue flag has a descending channel. And once the breakout occurs, it gives you what? A buy signal. So wherever we give you a buy signal on a blue flag, gives you a buy signal on what? A descending what? Channel. I hope you got that. Okay. I think this is even the last price pattern that we will talk about. Wow. So we were able to finish our price patterns. Really? All right. That was really nice. Let's see if we can identify this pattern. Although there's no need to identify the ascending path channel because that has been done on our PR flag. The descending channel that has been done on our bull flag. Let's see if we can find the horizontal what channel. The horizontal channel. Giving me money. All right. This can also be an example of what? A horizontal what? Channel. But this one is what? Bearish. And see after the breakout, it was able to work, make what? An impulse move. Let's see if we can find another one. Let's look at another pair. Please, if you have a question, you can raise your hand, please. Because we might be handing up anytime soon. Upstairs. Upstairs. The mic. Okay. Seems. This could be 1, 2. I see. It's not a price. Sorry. All right, this could be another example. When you look at this, you can see at least 2 touch points and see a touch point, a touch point, a touch point, a touch point, a touch point. And after the breakout, that was what a great impulse what downward what movement. All right. This is all we have to talk about the price action pattern. And I hope you guys will go back and try to reverse back on what you have learned. Try to find some analysis and allow us or give us the room to accredit your what analysis and know how you are improving on your price volume. All right, any question before we end the class for today? All right, since nobody is raising their hand, that means absolutely there is no question on work. All right, I need to see some work when I get to the group. I need to see some work done. Show me that you guys really understood. So even if you have some errors, there is still time for us to correct you as early as possible so that you don't master the wrong knowledge. So try to do some of this work at least. All this price pattern you have learned, try to at least identify one each. That means each price pattern you try to identify at least one of that pattern. And you can be able to look into it and know whether you really understood or whether you are also making errors. All right, guys. Good night. See you guys next time.